Hey mom, dad, abuelita, tío, I look to you to protect my future. That's why I need you to make sure I'm counted in the 2020 census. In the last census, over 1 million little kids weren't counted. 400,000 were Latino kids under 5. When I'm not counted in the census, there may not be enough funding for my escuela, hospital, daycare center, and the education and health programs I need to grow grande y fuerte. That's why from babies to kids like me, we all need to be counted. Filling out the census is quick and easy. You can do it online, by phone, or by mail starting March 12th. Plus, our information will be kept safe. So when you fill out the 2020 census, be sure to count me too. For more information on Census 2020, call 877-EL-CENSO or visit hazmecontar.org.
Hi everybody, good afternoon everybody. Welcome to our workshop on this beautiful Friday, May 29th. Man, has this month just gone by. I remember thinking at the time when we first heard that we would be quarantined, how we're going to be quarantined for the next 30 days, maybe 45 days, and thinking, these days are just going to drag on. But here we are, 8 weeks later. And I don't know where our time went, but luckily we have technology, we have social media, we have Facebook, YouTube, Instagram, and all these platforms that are available to us so that we're able to still connect with you and bring you this information, making sure that you stay informed, stay on top of all the resources that are made available to you. So welcome, everybody. My name is Dorima Hamilton. I'm the Executive Director of EIDL CDC. We're located here in East Los Angeles, serving our community. If you need any sort of help when it comes to finances, resources for small business owners, for your kids' education, jobs, make sure you reach out to us. Share this information with those that you think can benefit from it. Share. And you just never know what you might learn today. And so I want to thank you all for making the time to join us today live as you're watching this workshop. If you have any questions, comments, concerns, or if you would like for us to elaborate and clarify any information that we're going to be bringing to you today, don't be shy. Leave your comments down below. Let us know where you're watching us from too. And if you have a business, promote it. Use this time, use this platform to let us know what your business is, what you do in the community, so that others may find out and we can help each other during this time as we, enter the new phase of, the new normal is what they're calling it. And so I know a lot of businesses are going to start opening this week and we're really excited. So anyway, without further ado, I'm really excited for this with this workshop that we're going to have today. We're going to be talking about small business loans, specifically EIDL loans, economic injury disaster loans, and the Paycheck Protection Program, also known as the PPP loan. And I know a lot of you have reached out to us, asking us questions, asking us, where can we go? Where can we obtain these loans or find out more information about that? So we've answered that. We've heard your concerns, we've heard your questions, and we've brought this to you. So we're really excited that Antonio Pizano, who is a long friend of ours, who many of you met at our small business conference back in October, will be joining us today to provide more clarity, answer some of those questions, and point you to the proper resources and people so that you too can, take advantage and be able to make sure that you protect your business and get all the resources, funding that you need, so that when you do go back to, what the new normal is, you're set up in a place that you're successful and you can still provide a job for your employees and for yourself. But anyway, I can keep going and lose track of time, but let me give the time over to Antonio Pizano, who's joining us. Introduce yourself. What do you do? And we can start right there with the workshop. Thank you. Hi, Antonio. I think you're muted.
There you go. Lesson 1 in technology. Unmute yourself before you speak. I bet my wife would love to have a mute button for me. That's the best. That's the best joke of the day, everyone. Once again, thank you, Dorima, and to the EIDL CDC team for this invitation on sharing information that is beneficial to our business owners. Hello, everyone. My name is Antonio Pizano. Currently, I am a CRA senior credit manager for Ally Bank. Really, what that means is that I operate under the umbrella of community development under the bank's obligations to reinvest back into low to moderate income communities. But more so than that, I spent the previous 15 years prior to joining the bank this past year working for specifically nonprofits that operated in low to moderate income areas, primarily in deploying capital and technical assistance to small businesses specifically. So really my background is one of small business, technical assistance, and as well as lending with a bigger focus and emphasis on the lending and credit and underwriting of small businesses and loans, including SBA and other resources. So certainly my passion and a lot of my time and experience has been spent around the small business landscape, especially as it relates to smaller businesses that oftentimes don't have access to larger, programs or resources. So certainly I'm not too separated from that world. So anyway, with respect to our emphasis today with SBA and the type of resources available for small businesses. So we've all heard of our intention today is to give a high level overview of what the SBA payment or Paycheck Protection Program is, as well as touch a little bit on economic injury disaster loan programs and how they both have been deployed to be responsive to the impact that COVID-19 has had in our communities and specifically on our small businesses. So really the intent is, one, to provide you some high level information, but really we want to make this as interactive as possible. So please send in your questions if you hear something that I may say that you were wondering about, or you want me to elaborate more. Please send in your questions and we will do our best to address them on the spot live. So this is the first for me. So we're going to use technology to make this work. But having said that, so we'll start off with the acronym that most of us have been hearing a lot of over the last several weeks, which is PPP, or Paycheck Protection Program. So in response to the economic impact that COVID-19 has had on our economy, and more specifically, the shelter-in-place orders that has directly impacted our ability to operate our businesses as we would like to, the federal government under the CARES Act basically earmarked a certain number of dollars towards this Paycheck Protection Program. And we are currently in round 2 of that program. So even though this program has been around for a couple of weeks now, or a few weeks actually now, we're still getting a lot of questions on eligibility, What's the max loan amount? Is it forgivable? How is it forgivable? Who do I go to get the loan from? So hopefully we're going to provide some information now that will help you navigate through that process. So I'll kind of start really high level, right? So Paycheck Protection Program, in terms of loan eligibility and loan amounts, the max loan amount is really the lesser of $2 million or 2.5 times your monthly payroll. So in terms of what's the max amount available to me as a small business owner, simply take what your average 12-month payroll average is per month over the previous 12 months or annually, and then multiply that by 2.5 times. And that's really the directive that SBA has provided lenders is, hey, that's the max loan amount you're eligible for in terms of eligibility. And then from that, the two or three priorities to remember are it's got to be used for payroll, right? So at least up until last night, at least 75% of that loan has to be used to help retain employees. So if you're a business that has kept your employees and you need to find a way of keeping them employed and keeping them paid, this is what it's designed for. If you had to let go of your employees and lay them off, prior to applying for a PPP loan, this is an opportunity to retain them or hire them back, with the use of this PPP loan program, and then you can use it for that purpose. The other purposes that you can use it for are for things such as rent, mortgage payments, or other debt payments. So the act or the rules do allow you to use 25% of that loan for those purposes. Now those were the original rules. As of last night, Congress passed what's being called the Paycheck Protection Program, PPP, Flexibility Act, which basically loosened up some of those rules. So with respect to the 75-25% rule that I just mentioned, where 75% needs to be used for payroll, they provided some more flexibility there, and they reduced that to 60%. So in other words, in order for this loan to potentially be forgivable, you got to use at least 60% instead of 75% for payroll purposes, and the other 40% can be used for other eligible uses such as rent, mortgage payments, or other debt payments. So that's kind of a win, for small businesses, because now we have a little more flexibility with respect to that. In terms of the loan itself, I mentioned forgivable a couple times, right? So the whole intent of this program is not to give small businesses more debt, but treat it as a loan program. That way the program is facilitated through lenders such as banks, credit unions, and other non-bank type lenders. But it has a forgivable feature to it, as most of us have probably heard by now on the news, right, or through other sources. So that's an important feature to remember, because assuming it's used in accordance to the guidelines, which is mainly payroll and other eligible uses, businesses will have the ability to request forgiveness after at least 8 weeks from the date at which they got the loan, and then the SBA will come in and pay off that loan for them. So that's the best case scenario, right? That's the whole goal here, is for small businesses to use this as kind of that bridge for these 2 or 3 months that we're either sheltering in place or whatever other impact we've had on our small business. And then the intent is, as things recover, request forgiveness and have those loans be forgiven and ultimately wiped out. That's the best case. On a worst case scenario, these loans are being designed to still be very small business friendly or borrower friendly, in that they're 2-year loans, right? So they're a 2-year loan at 1% interest rate, and they do include a 6-month deferment. So on a worst case scenario, if for whatever reason you weren't able to justify or verify that you use the funds in accordance to what they were supposed to be used for, which is payroll primarily and the other uses, or any other reason, and you got stuck with a portion of this loan or all the loan, then on a worst case scenario, it'd be a 2-year loan at 1% interest rate, and the first 6 months, no payments deferred. So that's something important to keep in mind, because some of the concern in the industry amongst lenders and even borrowers is that there was such a rush to get through this program originally for obvious reasons that not all the T's were crossed and I's dotted in terms of, okay, well, what happens when borrowers need to request for forgiveness, right? So that's a worst case scenario. In terms of what happened last night with the approval of the Flexibility Act portion of the PPP program, I mentioned earlier that at least 60% of funds instead of 75 need to be used for payroll. A couple of other things that are important to note is that originally all funds needed to be expended by June 30th, as well as the program was only going to be alive through June 30th. Well, what they've done now is they've extended those two periods through the end of the calendar year, to December 31st. So there doesn't need to be a mad rush to try and get more of these loans out or try and get borrowers to submit and spend all their money in such a short period of time. So we have more breathing room in terms of December 31st. The other kind of cool thing about it that from a borrower standpoint, we may not think it impacts us, but just being in the industry, I think it does, is that there's a carve out. There's a carve out for non-traditional bank and credit union lenders that focus more on smaller businesses, low to moderate income communities. So they carved out $10 billion specifically for smaller nonprofit type organizations that do these types of loans for them to be able to deploy to their borrowers. What's the great thing about that is that these organizations are already operating in communities of highest need, and they're already dealing with businesses or entrepreneurs of greatest need. They either didn't know too much about where to apply or didn't have a relationship with a bank or a credit union that would take their PPP application, or maybe they just didn't feel comfortable applying because they thought they wouldn't qualify or be eligible. Well, the good news here is that there's a carve out of $10 billion specifically for these nonprofit organizations to deploy in the communities they already operate in. So that's a win, in my opinion, for smaller, what we call smaller mom and pop businesses, who all they need is maybe $10, $15, $20,000 to help cover, payroll for their 2 or 3 employees and maybe a couple months worth of rent payments, right? Where we now have that kind of access. So that's a huge win in terms of what just got approved last night. So just a couple of notes on that. So the forgivable nature of this is the important piece. So if we say we're using it for payroll and other eligible uses, then there's going to come a time, at least 8 weeks after you get this loan, to request a waiver and also provide supporting documentation that the loan was used as such for the SBA to be able to approve the forgiveness. So that's the important key to remember off of the PPP. The other program I want to just highlight, just very high level, is a much more traditional SBA program, and that's the Economic Injury Disaster Loan Program, or better known as the Disaster Loan Program, or SBA Disaster Loan Program. This is a program that's been around for many, many years, and is usually a program that is deployed in response to most natural disasters, whether it's Hurricane Katrina or even the wildfires that we had here in California over the last several years. Any kind of economic disaster where either the state or the federal government declared a state of emergency, these type of programs are being deployed. So the impact that COVID-19 and coronavirus has had is no different. EIDL loans are available as well, and it is possible to have a PPP loan and an EIDL loan. The biggest difference is that whereas a PPP loan is being administered through financial institutions, whether it's banks or credit unions or other types of lenders, EIDL loans are actually loans provided directly by the SBA, by the federal government. It's really the only type of loan program that is actually made directly by the SBA. And the great thing about those loans is that, well, the con is that they're not forgivable, right? It's still a loan. However, because it's usually in response to a disaster, a natural disaster, they're very borrower friendly. So they're typically up to 30-year terms. Okay. They're typically as low as 1.5% up to 3.75%. So the interest rate is fairly reasonable and below market. And again, it's made in a way where they can provide a 6 month or 12-month interest only period as folks recover. So that's still available. That's been around for years. It's still available. And again, it's a loan that's provided directly by the SBA, for these types of purposes specifically. So another wonderful program. With that, I can stop there, Dorima, and see if we have any questions.
Yeah, no, that's all very good. Yeah, we do have a couple questions, but it's very good. And I would just like to iterate for all those that are watching, reach out, find your local bank and reach out. Like here at Ideal, we were able to apply for the PPP loan. And first we went through the bank that we bank with, but they're one of the larger banks. And obviously they got thousands, if not hundreds of thousands of applications, and so we didn't hear back. But one of our local friends, actually a credit union, reached out to us and wanted to offer their help and assistance. So that was really awesome to see. And we too got the EIDL loan, so we received $1,000 for every employee that we have here at Ideal. So we were really fortunate and excited to be able to receive those funds, because in this time you just don't know. And we're a nonprofit. We rely on donations. A lot of that was put on hold or reallocated for other purposes, that, feeding people and PPE and medical supplies, and which is all understandable, but it still puts us in a place of like uncertainty. And but we were fortunate enough. And so we want to bring you this information. I know that some of you have already asked questions here. And one of those is, where can I go to find out which CDFIs or credit unions or these, banks that are going to be receiving these funds? So where can I go to find out that information?
That's a great question, and I'm going to take it one step even further in terms of detail. So when the federal government says they're carving out, in this case, $10 billion for specifically for CDFI type organizations or nonprofit organizations. CDFIs, I know we've thrown that term around a couple times already. It stands for Community Development Financial Institution. Don't worry about remembering what that is, but just know that that CDFI designation, when given to a nonprofit that provides services to their community, and more often than not, a low to moderate income community, just know that that designation is given by the U.S. Department of Treasury. And I share that because, if you ever get referred to a CDFI, whether it's by your local banker or by a wonderful organization like Ideal CDC, as a consumer, just know that that organization, it has been vetted to some extent. One, in terms of it being a nonprofit, but more importantly, because of that designation, they've been vetted by a certain standard via the U.S. Department of Treasury, in that they provide that a minimum amount of services go specifically to populations or areas of greatest need. So just have that confidence level that when referred to an organization that may have CDFI status, that's always good. In terms of where to go, or a couple of resources that you can go to find these wonderful organizations, and here in California, and particularly in LA, we have a bunch, just because we're LA and we're the second or third largest, metropolitan area in the nation. We have a lot of wonderful ones, but in terms of SBA specifically, go to sba.gov, and there's a feature in there where it says find a lender, and you can find it by state, city, or zip code, and it'll give you a list of all SBA approved lenders, yes, including banks. So you may not be able to get down to non-bank lenders, but you'll at least see a list of all SBA approved lenders that are providing SBA products, including PPP, in that. And then from there, you can kind of navigate, okay, what non-bank lenders do I have around me that may be a nonprofit and may be more appropriate for me? So that's one way to find SBA approved lenders. The other way to kind of find CDFIs specifically, the ones I described earlier that have been vetted to some extent, and just merely because of their CDFI designation, they provide a certain amount of service and investment into low to moderate income areas specifically, is going to the CDFI website. So there's cdfi.org, or the CDFI Fund, cdfifund.org. That's another wonderful resource where you can find by state, or I think even by city or zip code, a list of organizations that are CDFIs. The only caveat to that is not all CDFIs are lenders. In other words, you probably have more CDFIs that are not lenders than that are. So you may have to, if you go that route, you may have to navigate a little more to find those that may be lenders. So I would suggest going through SBA first, just because you would find a list of lenders there specifically.
Awesome. That's great. Yeah. I personally too was constantly checking that website to make sure that the information was updated, but also because I had a lot of colleagues and peers and just members in our community reach out, and so I wanted to make sure that I was pointing them to the proper websites, right? So glad that those are staying up to date and people are updating, as well as the government. I have another question here from someone watching saying, is there a benefit between, or which one would you recommend, the PPP, EIDL? What are the benefits of either for these two loan programs?
Sure. Excellent question. And if I took off my banker hat for a minute, I would just whisper in your ear and say, well, take both, right?
Yeah,
take
we did.
take whatever you need, right? Yeah, take
Yeah.
whatever you need to make sure that you not only survive through this period, but that you have the capital you're going to need to reopen, right? As we recover, right? There's survival right now, and there's just staying afloat. And then once we open and we start normalizing, whatever that may mean, you may need some capital to kind of ramp up, right? So pros and cons, right? So one of the obvious ones is PPP versus EIDL. The pro about the PPP, two, I would put them 1A, 1B, is that one, it's forgivable, right? So the PPP loan has a forgivable feature, meaning that if you use it as it's intended to be used, which is primarily for payroll and employee retention, as well as the other eligible uses like mortgage or rent payments or whatever, then you can request for it to be forgiven, after 8 weeks, which means that after 8 weeks, if you do that and you're successful, it goes away. You don't owe anything. So that's one pro over the EIDL, the disaster loan, where it's a loan. It's a low cost loan, but it's still a loan. The other pro I would give to the PPP, just in terms of what we're going through right now, is that there's very little or no underwriting in the PPP loan, whereas for the disaster loan there is. And what do I mean by that? So for the PPP loan specifically, because it was so important for the federal government and lenders to deploy this capital as quickly as possible and as easily as possible, there really is no underwriting in terms of these loans. Really, the underwriting for lenders are limited to assuring that borrowers submit the minimum documentation required for that. So in other words, and I've had a couple calls in the last several weeks of folks calling me directly and saying, "Hey, Antonio, I applied for what I thought was a PPP loan, but I was declined because my debt ratio was too high." And as soon as I heard that just it made me think, well, that's not a PPP loan, because lenders are not underwriting these loans in that traditional manner, because they're not supposed to. How do you underwrite a loan for a small business that's not operating right now, right? So that's not the intention. So if for all of you out there that may have had a similar experience, you may have not been applying specifically for a PPP loan, because really it's more of a checklist. Hey, provide this documentation, provide that documentation, provide these certifications, and you're done. As long as you check all the boxes, you should be eligible to receive whatever loan amount you can get. So that's another pro over the EIDL loan, where the disaster loan, there is going to be some level of underwriting. In other words, even though it's intended to be a loan and it's intended to be in response to a disaster, there is going to be some level of underwriting. It's still friendly because it's a disaster loan, right? In response to a disaster. In other words, you've been impacted by a disaster, but there is going to be some level of underwriting that includes, okay, how were you operating prior to that disaster? What were your revenues? Were you profitable? Would you be able to repay, assuming you get back to where you were before this disaster? So that would be another pro on the PPP side. Now, that's not to say that disaster loan doesn't serve a good purpose. It certainly serves a good purpose, and here's why. The PPP loan is very specific in terms of its use. It's specific to primarily payroll, because it was intended to keep people employed, right? So as of last night, 60% minimum needs to be used for payroll, and the other 40% can be used for eligible purposes. But those eligible purposes are limited to very specific items, including debt payments, other debt payments, mortgage payments, and rents or utilities. Okay, so I may be missing one, but they're very specific to those uses. There's no talk about inventory or marketing or payroll or working capital in there. Nothing. Those uses are not eligible. Well, the disaster loan is designed specifically for that. It's designed for you to be able to lay out a plan and say, okay, as I recover from shelter in place or not being able to operate, I'm going to need to purchase day one a large amount of inventory. If you're a wholesaler, a distributor, a retailer, so you're going to need X amount for inventory. Well, PPP doesn't let you do that. Disaster loan does. You may need to have 2 to 4 weeks or 2 months worth of working capital because it's going to take you some time to ramp up again. So PPP doesn't allow you to do that. Disaster loan does. You can request working capital funds in there. You may need to purchase an additional equipment or whatever. That's eligible. You may have marketing expenses because now you got to ramp up your marketing campaign again because you shut it down while you were sheltering in place. That's all eligible under the disaster loan program. So I wouldn't say it's apples and oranges, that they're both kind of serving the same purpose. Yeah. But I think if done correctly and it's strategized well, there's a place where most businesses, if eligible, can find use for both of them.
Wow. Very good. I didn't even know that myself. I had no idea that, the benefits of having, the PPP or the EIDL. So that's very good that you were able to clarify that because I applied for both. I just, the minute the application was made available for the EIDL, I made sure I hopped on it. My husband was like, make sure you guys hop on it and take advantage. And I'm glad we did. But now I can see the benefits of having to taking advantage of both, and so thanks for clarifying that. And I do have, another question here. Well, I have a couple questions, but the first one that relates to this is, so the person here asking is they applied for the PPP loan, already received the funds. They already have been using them for this last month. But now after hearing you, they realize, oh, I forgot to include other, cost into that, like rent and different things like that. Can I still go back to my lender and modify that loan, or can I apply for a second PPP loan to make up for that expense that I missed out on the opportunity to include in the first time?
It's a great question, actually. It's kind of a complicated one. So I'm going to go step by step here. Okay. So the answer to can I go back and either reapply to increase my existing loan or get another PPP loan? The answer to that is no on both, unfortunately. So you definitely can't get a second PPP loan. You're only limited to one PPP loan, okay? And you certainly can't go back and refinance or extend your existing loan because these loans are, not to get too much in the weeds, but these loans are packaged up, in the secondary market and sold off. So once they're made and they're done, right? More importantly, though, is in terms of including other eligible uses, and here's where we make it confusing, okay? Even though that the PPP loan can be used for other uses other than payroll, your max loan amount is limited to 2.5 times your payroll. In other words, you cannot get a loan that's higher than what equates to 2.5 times your payroll. So it's not 2.5 times your payroll plus, okay, I'd like another 20,000 for rent. No, it's, and I know it's confusing. Yeah. It's the max loan you're eligible for is 2.5 times your payroll. And of that amount, you can use a portion of it for utilities and rent or whatever. But if you want it to be forgivable, as of last night, you got to use at least 60% of that for payroll. I hope that helps. I know it can be a little confusing. A lot of us, trust me, even the banks were confused when this came out, because this all came out very quickly, especially in round one from SBA, but it's a very good question. Your max loan amount is limited to 2.5 times your payroll, nothing more. However, you can use a portion of that for other uses other than payroll.
I see. Well, thanks for clarifying that. I know, like, one of the things a story that comes to mind is just working with pastors. A lot of them receive housing allowance, and some of them didn't include that originally, which is a significant portion of their payroll, right? But now, after reading the guidelines from the SBA directly, you are able to include that. So unfortunately, a lot of people missed out on that opportunity. So hopefully that clarifies for all of you that are watching, because I know things change all the time, and and you can't blame the loan officers, because this is such a new program that we're still fully trying to understand it right now, and even just with everything that was extended yesterday. So it's unfortunate, but at the same time, it's still some help that you're able to use for your payroll. Another question we have here is, so if I am self-employed, it means I can apply for the PPP loan and the EIDL to pay my own salary, even though I'm my own boss, I'm an entrepreneur, I have my own business, I don't have any employees or anything like that?
That's a very common question. So
Right.
the simple answer to that is yes. If you are self-employed, if you're a sole proprietor, you are eligible to apply for a PPP loan. If you are self-employed, or even if you have a small business and you have folks that work for you, that's where it
Mm,
gets a little trickier, a little complicated, right?
right.
So if they are truly employees, meaning that you issue them a W-2 at the end of the year, you can also include their wages or salaries plus taxes, vacation, and all that, all total compensation as part of your loan.
Mm,
If you have people that work for you, but they are paid via a 1099. In other words, you treat them as independent contractors, then you cannot include them as part of your loan. They themselves can act as their own sole proprietor business and apply for their own loan program.
mm,
There's been a lot of confusion on that, and rightfully
yeah.
so. And the example that comes to mind, most common for me at least, are barbershops and beauty salons, for example,
Yeah.
that oftentimes folks that work in that industry, they're not employees of that shop, and they operate as their own independent contractor, and they get paid a 1099. So in that example, the owner of that barbershop can certainly apply as a sole proprietor, and they can certainly include their average monthly salary in calculating their loan amount. However, they wouldn't be able to include that of the folks that are working as independent contractors. They would have to apply themselves for something like that.
Mm. Well,
Yeah.
yeah, I know a lot of people in the beauty industry, and that's something that I got 100 text messages on, is like, do I apply myself or do I wait for the salon owner to apply on my behalf? And so, um, you know, luckily I had some friends that I was able to reach out to and provide the answers to, but thanks for clarifying that. I have another question here. It says, how soon does this loan get forgiven? And then there's a part 2 question to that says, once the loan is forgiven or paid in full, does this help my credit score?
Good question. So how soon can it be forgiven? So according to the final interim final rule, I know that sounds kind of like an oxymoron, but that's what it says. Um, that was published a few days ago. Um, originally, borrowers can apply or request forgiveness within 8 weeks of
Oh,
obtaining their loan. And the thought process behind that being that 8 weeks is 2 months, and it's supposed to cover at least 2 months with the payroll. So then you can request the waiver or the forgiveness after that. So after 8 weeks, you can then request the waiver directly from your lender. So you make the request directly with the bank or credit union or the lender that lent you the money, and they will then process that and work with the SBA in getting it
mm,
forgiven. That deadline is one of the deadlines that got extended with the approval of the PPP Flexibility Act last night. So now that's been pushed all the way back to December 31st, which is a
mm,
good thing, because originally with the 8-week time period, the pressure there was that small businesses, if they had already laid off folks, they had to retain them really quick, and they had to spend most or all that money within those 8 weeks. Now
mm.
that we have that December 31st deadline, small businesses that have already obtained or will be obtaining a PPP loan now have sufficient time between now and the end of the calendar year to spend those funds,
That's
but
great.
also make the forgiveness request. So that's kind of that time period. Did I answer the second part of that question? What was that second part?
The second part of that question was, if I'm assuming Not, but they asked if your loan gets forgiven, does this help your credit score?
Excellent. It should have absolutely no impact on your credit score. So in other words, these loans, just because of how they are documented, honestly shouldn't reflect on your personal credit to begin with.
Mm-hmm.
So it should have really no impact on your credit score. And I know there's been concerns in the industry in general from borrowers, that sometimes they may think that it may even have a negative impact. In other words, that applying for this type of disaster type loan would have a negative impact on their credit worthiness or ability to get a loan in the
Mm.
future, and that's simply false. I mean, think of it this way: a lot of the same financial institutions that are doing these loans are probably getting PPP loans themselves to be able to make payroll and stuff like that. So,
Mm.
so my answer to that, just humbly, would be no. There should be, and I suspect there wouldn't be any negative impact for obtaining either types of these loans.
Okay.
If anything, I would argue that if you don't get one of these loans and your business is further negatively impacted because you
Mm.
didn't get it,
Yeah.
that would have a greater negative impact for you securing capital in the future, because then you didn't do anything in response
Yeah,
to
that's
keep
very
your
true.
business afloat. So,
Okay. Yeah, that's very true. I didn't even think about it that way, but that's true. At least you're, being proactive versus just letting things kind of take its course and not really guiding it yourself and trying to take charge of the situation if you can. But thank you so much for clarifying. Those are the only
a
questions we
future
have.
lender, I mean, just being a lender myself, during,
Uh-huh.
sorry to interrupt, but
No,
a
it's
future
fine.
lender may even ask you, well, why didn't you apply for a loan?
Yeah.
Why didn't you maintain it? That's going to give that lender, insight as to your thinking behind keeping it afloat and using resources available to you to maintain operations. So,
Yeah, that's true. That's true. Well, those are the only questions we have for now. So if you want to continue with
yeah, I
the
mean, what I'd
explanation.
like to share also, and take this opportunity. So we talked about PPP at a very high level, and hopefully, I know, it's pretty basic for the most part. I don't want to get too much in the weeds, but 4 or 5 weeks into this program, there's still a lot of the basic questions, and really the idea behind that is to hopefully motivate folks that maybe haven't applied because they don't think they qualify or they don't think they're eligible or whatever. Just do it. I had a real life example a week and a half ago or so where somebody that just knew me from the work that I'd done before called me. She operates a beauty salon, and she's actually a sister of a high school friend of mine, and basically told me that she had if I knew of any other resources, because she wasn't qualified for a PPP loan. So I asked her. I said, well, why were you not qualified? And she said that her debt ratio was too high, right? So as soon as she told me that, I thought, well, that's not a PPP loan, because these loans are not being underwritten in that kind of traditional loan way, right? It's really more of an eligibility program and not so much a, hey, can you repay this back program? It's not intended to be that, nor do lenders want to take that kind of time to underwrite this kind of loan. So that told me right away that she in fact did not apply for a PPP loan. Basically, it was some other unknown lender who was using the PPP name or feature to get people to apply for their loan program. And it's not, I don't know if it's a scam or not, but it was basically not a true PPP loan. So don't let, if for those of you out there that have heard similar stories about not being able to qualify because of debt ratio or something like that, it probably isn't a PPP loan. So that's one thing I want to share. The other thing, and this is probably more specific to California, well, it is specific to California, is here in California, we're pretty fortunate in that California is one of the few states, believe it or not, that has its own small business credit enhancement programs. So we have a collateral support program, but more specifically, we have what's called a small business loan guarantee program. And in response to this disaster, and in response to COVID-19 and the impact it's having, our governor several weeks ago set aside $50 million to support this state loan guarantee program under the disaster relief loan program. And he authorized to leverage that 2 times. Well, he did that again about a week ago, where he put in another $50 million towards that program. So essentially, the state of California has about $200 million available in disaster loan guarantees to be used. What does that mean? That means that the state of California, in addition to the SBA type of programs, also has a specific California program that lenders, banks, credit unions, nonprofits can use to deploy more capital. I'm sharing that because let's just say that whether you've been proactive and you got a PPP loan and maybe a disaster loan and it's served its purposes, or you haven't gotten either of those loans, either because it was too late, you weren't eligible, or we may have folks out there that maybe don't have a social and operate with an ITIN number, for example, and weren't eligible for those programs. Well, there are organizations mobilizing, whether it's smaller banks or credit unions or nonprofit organizations that do loans, that are using this disaster relief loan guarantee program to provide small business loans with the support of a state guarantee. And what I like about that is that they are mobilizing to provide a similar type of friendly loan where it's a 5 or 6 year loan. It's going to be 0% or 1% interest rate, and it'll have like 6 first months of deferred payments. That way it gives your business time to ramp up and normalize, right? So I want to at least share that as an additional, very California specific example or resource in addition to, the SBA PPP and the disaster loan program, So for those of you interested or more curious about that, the program, the formal name of the program is California Small Business Loan Guarantee Program. And it's under the acronym IBank. So like if you Google State of California IBank, just like it sounds, the formal name is California Infrastructure and Economic Development Bank. You'll find information about that California Disaster Loan Guarantee Program. It doesn't mean that the state of California is doing loans directly. So don't think you can call the state and get a loan. It just means that the same type of lenders that are doing these other loans, if they participate under this program, they have access to this other guarantee program where they can be friendlier. So I wanted to share at least that. And with that, I think the third thing I can share also is that the more traditional way that we know of accessing loans or capital typically are the banks and credit unions, right? But you heard us mention CDFI earlier, and then I'll just say it one more time. These organizations, the nonprofit organizations that are not banks or credit unions, that are simply nonprofits that typically operate for the sole purpose of providing services and resources to populations that need it most. In this case, small businesses. For those that do small business loans or small business lending, they oftentimes have access to these types of programs. And what's great about these programs, and I'll use the example that Dorima gave earlier about, hey, I applied at a big bank and we didn't really get the service we thought we were going to get, or we were unclear as to whether or not we got the PPP loan or whatever, which is true in many other cases. But then we have a credit union that was smaller, more local, that called us and kind of provided us better service, one-on-one service. Think of it the same way. These nonprofit organizations are oftentimes a wonderful resource for folks that may operate smaller businesses who don't need a ton of capital and oftentimes don't get the type of service we'd expect to get from a larger institution or a larger bank. So I would encourage folks to also look into those kind of resources.
Wow, great. Thank you for sharing, specifically, I'm really excited that you shared about the iBank. I've heard it, people talk about it, mention it, but I never heard anybody explain it or what it is or how you can apply or why it's only California. So I'm glad you were able to cover that. And hopefully those that are watching, take advantage of all of these. You can't get a loan for 0 interest or 1% anywhere, And so if this can help you, making sure that you continue to have your employees on payroll for the remainder of the year and continue operating. That's what they put these resources there for, so that you don't have to continue living in fear when it comes to what's going to happen with my business tomorrow, or when the stay-at-home order is lifted and I can now open my doors. What is that going to look like? I have payroll for 8 weeks, but what about 8 weeks after that? So take advantage of all those and ask questions, do your research, reach out to all of us. We're here to serve and help you so that you can make sure that you're successful. And, everybody's in this together. That's the thing. You're not the only one. Everybody unfortunately is going through this together. So that's why as a community, we're coming together to make sure that you are pointed to the proper direction, the proper resources. I know there's a lot of misinformation right now, especially on social media. Like I've seen people say that you can apply for a PPP loan only at the major banks, or you can go to your local grocery store and get a loan there. All that is false. That is not true. You can't go to, I know there's some grocery stores that do have like Wells Fargo or Bank of America, but if it's like a little bank and you don't know what they're doing or how they're operating, ask questions, reach out to one of us. Maybe we can tell you, yes, they are, or do your research on the SBA.gov and see if that bank is listed on there as one of the approved lenders of these programs. That's probably the best resource. And if it's not there, then reach out, ask questions. Because the last thing we would want is for you to go to these places and get a loan thinking that it's going to get forgiven, but then it's not. And then it's going to be much worse, right? Or like Antonio mentioned, this is something that I didn't think about, is like being proactive. You don't know what can happen, and you don't know what can happen after this, but later in the future, if you want to get a loan and the lender asks you, why didn't you take advantage? Like this could have helped you so that you're in a much better place now. That is very true. And sometimes we don't think about these things and we just respond, okay, well, I have enough for right now, but what about later? And so
along those same lines, Dorima, if I can add to that, because you
yes.
just made me think of something. Everything you're saying is so true. And there was a point in my life earlier in my career where I spent a lot of time doing technical assistance and consulting to small businesses. And another thing I just would suggest and leave folks with is use this time now to plan. Yeah. What is your recovery going to look like? Right. How are you going to open? If your business falls into the category of, hey, I can open starting Monday, okay, what does that look like besides just opening doors? And I say that purposely because as you get back out there, and let's say you are going to need capital beyond PPP or disaster loan program or whatever, now's the time, if you have it, to really plan for that. Creating your own little mini business plan, even if it's on a sheet of paper, handwritten. What is that opening going to look like for you? What are you going to need? So that way, if you do identify you have a need for loan capital, let's say, that's beyond these other programs, you can approach a lender. And I can tell you, just being a lender myself, that lenders will be responsive to that if you're prepared, if you're ready, come with a plan in place. They're not going to be shocked that you haven't operated for 3 or 4 months. They're going to know you haven't operated for 3 or 4 months. They're going to want to know, okay, Mr. or Mrs. Business Owner, what's your plan for reopening? How much are you going to need? What are you going to need it for? So this is all more traditional, just kind of business planning type stuff. So if you have a little more time in your hands because you're not operating at full capacity or any capacity because you've been forced to shelter in place, then I would say there's still a lot of wonderful resources. For those of you that had been on last week for the SBDC and Claudia Shaw doing her workshop, I'm sure she touched on a lot of the more traditional resources available in terms of business planning workshops, accounting workshops, and that kind of stuff. I believe in that stuff 100%. And again, I'm a lender. I love seeing that stuff, especially when the numbers don't pan out, right? So that's an opportunity for folks out there who think that, hey, well, my number's not that great, or I was already starting my business before this coronavirus thing or whatever. So what? Put a good plan together, and I guarantee you the right lender will listen to that. So.
Yeah, and that's very true. It's way better to have something in place, some sort of plan, versus just, not doing anything and hoping that someone will reach out and lend a hand. And, a lot of the times that doesn't happen. Once in a blue moon, maybe someone will reach out, but it's so much better. And I've heard it from other lenders too, that even just going forward, having some sort of plan in place in your business plan that talks about, if we were to face another pandemic or something similar, what are you going to do to prepare yourself if we were to, stay at home and do another stay-at-home order for another month or 3 months, and I know we talked about a second or a third wave. And so these are some things that you can do right now. And Antonio, you mentioned it. Claudia Shaw, last week we had a workshop on what the different stages of reopening back our businesses, what that looks like, the signage that you need to have, the PPE that you need to have, the things that you need to have in order in your business plan. All that is very important. Right now is a time that you're at home. Take advantage of this time that you have to start putting systems in place, create a plan, communicate with your team, communicate with your family, communicate with those around you and the loan officer that you're working with, so that at least you have a sounding board that you can tell them, like, this is what I'm thinking, this is what am I on the right place, am I thinking this, am I processing this information correctly, like, what are your thoughts? And so it's so much better to be proactive versus reactive, right? Because no one could have predicted that this could have happened, but if you have a plan for in case of an emergency, then it's just another event versus, oh my gosh, what do I do? And you start panicking, and sometimes we don't make the best decisions because they're out of emotion, they're out of fear, they're out of panic. And so this is why we bring these resources to you, because we want to help you succeed. We want to see you flourishing and open doors again, and invite us to come and take advantage of, whether it's a restaurant, beauty, whatever industry you're in. Let us know, and so that we can support, but also that you are in a better place, so that you're not constantly in fear and maybe have sleepless nights, right? And so I'm glad that you were able to touch on that and just share the information and your knowledge and expertise with our audience here watching us today, because I know that we're getting a lot of hearts right here of people really liking the information, which is great. And we're super grateful, Antonio, that, you took your Friday evening to spend it with us in our community and provide this information for us. So thank you.
Thank you for having me. Appreciate the opportunity to support this cause, and I applaud your efforts, Ideal CDC and you, Dorima, and what you're doing for small businesses. So keep up the great work, and again, for everybody watching, stay positive. I know times are tough, but please use your resources. Ask questions. If you know of no other resources other than your local banker, challenge that bank or that banker to tell you more about what resources may be available to you beyond just them. I guarantee you they will respond. Maybe not immediately, they don't know them, but they will respond to that. So please don't be shy, and good luck to everyone.
Yes, thank you again, Antonio. And just to wrap up and finish up, I know a lot of you signed up and participated, are engaged here in the conversation, here in the comments, whether it's on Facebook or YouTube. So we're really grateful, and we're going to move on to the last part, which is the raffle. So if you signed up and if you participated, you'll see your name here on the raffle. And thank you again, Antonio, for your time and everything that you do for us. We're really grateful. So on the screen, you'll see the Wheel of Fortune and you'll see the name. So we'll continue in the rhythm that we've been going. When the third name comes up, that'll be the winner. So, once again, if you see your name come up the third time, make sure you reach out to us within the hour so that we can ship that card over to you. It's a $50 gift card. We're hoping that this can be of a little help to you as you start preparing, opening doors, and possibly purchase some supplies. So anyway, without further ado, let's on your screen, you'll see the Wheel of Fortune, and we'll do the first spin. All right, let's see. Who's the first name that comes up? Petronila. Okay, Petronila, I know you're watching. I saw you in the comments. Don't worry. You're still in the raffle, so you still have 2 more opportunities to participate and possibly win. Who is it?
Claudio Latidos.
Claudio, Pastor Claudio. Okay, you're still in the raffle. Don't worry. I saw you there. One more time. Let's see who the winner is. Comment down below if you think you're the winner. Let us know. Let's see. Who is it? Who's the winner?
No way.
Claudio. Oh my God. Claudio, see, you won. Pastor Claudio Lapidos. I know that you were watching and you were commenting down below. I know you also participate in our annual small business conference. So please reach out to us, Pastor, and let us know how we can get that card over to you. Thank you again, everybody, for watching. Make sure you subscribe to our channels, like, share with everybody that you think can benefit from this information. And once again, thank you all. Hope you have a wonderful and safe weekend. Bye.